Hi, my name is Danny Brown, and I'm the CEO of Myriad Real Estate Group, and this is going to be our September market update. So the month of September is upon us, the year is flying by, and we are seeing more of the same. So right now, active inventory for Maricopa County is still hovering just above 8,000 active listings. So that number has been trending down slowly. So we were in kind of the mid 8,000 range, and now we're closer to about 8,200. So with the spike in interest rates that we've seen over the last couple of weeks, less people are motivated to sell. They're not putting their homes on the market. So we're probably going to see that trend continue where we see fewer and fewer homes on the market. Conversely, when interest rates go up, we also see demand fall. So right now we're just in kind of this stalemate where with high interest rates, not a lot of people selling, not a lot of people buying. So the market is relatively balanced. If the ball was in anyone's court, it still favors sellers. So the demand for housing, even with these higher rates, is still outpacing what's active on the market, meaning that there's more buyers than there are sellers. The biggest question right now in the housing industry are mortgage rates. If you reference back to my videos last year and all of this year, I would have never guessed that we would be north of 7% towards the end of 2023, but that is where we are at. It just goes to show you that it is very hard to predict what is going to happen with markets. And so we are north of 7%. And just this last week, we had rates in the 8s if you weren't paying any points. So what are buyers supposed to do in this high rate environment and where affordability is at really all-time lows? We haven't seen affordability this stressed since the 80s. So there are different loan programs that you can qualify for. Zillow, for example, is running a pilot program just in Phoenix where you can put as little as 1% down to try to free up cash so that you can use that to buy points on your mortgage and to try to make things a little bit more affordable. Loans like that have existed for a long time. They've been primarily for like VA and veterans where they put 0% down. So this is just a pilot program specific to Phoenix and run through Zillow. Other programs that are out there are ARMs. So there's some credit unions that are running some really good deals where you do like a 10-year ARM where your interest rate is fixed for 10 years. They do discounts on their rates based on relationship pricing. So if you have a checking account with them, do auto pay, you can get discounts on your rate that way. And then, of course, there is the 2-1 buy down that everyone was screaming about when the market shifted last year, where if you can get a seller to contribute 2% towards your closing costs, you can actually buy your rate down a full percentage point. So let's say rates are at 7% today. Year 1, your rate would be at 5%. Year 2, your rate would be at 6%. And then year 3, through the end of the term, would go back to 7%. So it's not going to fluctuate any more than that. The hope is that within that 2-year time frame, you may have an opportunity to refinance into a 30-year fixed at a lower rate. So that's kind of the idea behind the buy down. So the advantages to buyers right now is that as rates are higher, you have less competition. So there's less buyers in the market, giving you more choices for homes, getting sellers to help you buy those rates down, give you additional funds towards your closing costs. Sellers are definitely doing a lot of repairs on homes, giving credits in lieu of repairs. So buyers can still get good deals, and it's due to the fact that they have less competition. But it really kind of comes down to, can you afford that monthly payment in the event that mortgage rates remain sticky or higher over a longer period of time? So with these unique loan programs, what's not happening is a credit bubble. That's what was happening in 2005 leading up to the housing market collapse in 2008. That was a credit bubble, right? The lenders were writing bad loans. Everybody was doing these short-term ARMs where you had adjustable rates. That's not what's happening now. Even with the 2-1 buy down, after the first 2 years, your rate is locked in to what it would have been if you never did the 2-1 buy down, and you have to qualify at that higher rate. So based on your debt to income, you have to be able to afford that monthly payment according to the lender. So the thing I hate about everyone in my industry is they're always talking about this is a good time to buy. It is a good time to buy when you are financially ready. It doesn't matter what the market is doing. I don't think that you're going to lose value on the purchase of your home. That's what everyone's really afraid of. And if you can afford the monthly payment and you can afford your lifestyle with that monthly payment, then it's a good time to buy for you, not based on what the market is telling you to do. So I think that that gets lost a lot in the translation, is buying a home is a very individualistic thing that you're doing, and you have to be financially ready. So then is it a good or a bad time for you personally? The other thing I hate are all the videos talking about how the market's going to crash 30 or 40%. That's not going to happen either. Right now, the market is really frozen between buyers and sellers. There's not a lot of transactions happening. And the crash that actually happened in the real estate market was a crash in demand. And that happened last year. That was in November and December. We saw a huge drop off in demand like we have never seen before. And home values did come off their highs a little bit. But that was the crash. We didn't see a crash in home values. It just didn't happen, nor is it going to. We have more people that want homes and need to live in homes than there are homes available, and that is not something that is going to change overnight. People don't sell to become homeless. People don't sell out of a 3 or 4% low mortgage payment to go into a higher rental with smaller square footage. It just doesn't happen. So we're not going to see this flood of inventory where all of a sudden supply shoots up while demand's low, causing home values to crash. So those videos saying that home values are going to fall 30 to 40% are just plain wrong. So if you're paying attention to the market, you may also see more price drops happening, and that's a good thing. And what tends to happen when you're in a market where home values are going up, people are pricing their home off of what happened in the past, right? So home values are increasing, which they have been this entire year. And so with each sale, you're pricing higher and higher. Well, when the market starts to slow down, as it is right now, and it's leveling off, people will overprice their home and they need to adjust to come back down to reality and to come back to fair market value. Also, if you look at historical trends, in Phoenix, we always see the average sales price of homes drop July, August, September, and through the end of the year because our luxury market doesn't sell in the summer or during the holidays. They sell in the springtime. So if you're talking averages and statistics, if you take out all of the multi-million-dollar homes, guess what happens? You have less volume in terms of total listings on the market. And so when you divide it out, you have a lower average. So historically, this happens every year. So when they say that the average price point or the average sales price is going down, that always happens. It's just part of the seasonality of Phoenix, where not a ton of luxury transactions are happening in that July through December timeframe. What sellers can expect in this market is you got to price your home accurate. You got to stop riding that wave of higher prices and pretty much price where home values have been. Don't price, substantially higher than what your neighbor just sold for. Because that is over, right? So with the higher interest rates, demand's falling, and so we're seeing the market really flatten out in terms of home price appreciation. So we've probably seen most of the appreciation that we're going to see for this year. So factoring that in, your home will sell if it's priced accurately. There are absolutely buyers in the market, and so homes that are priced well, that show well, and look good are still also getting multiple offers and could potentially sell above the list price. We had one just like that recently that ended up selling for about $40,000 above where we were listed because it showed well, they priced it accurately, and there were multiple people that were interested in it, so we got them to compete. So really, sellers need to set those proper expectations in terms of pricing, and they have to be okay with helping buyers buy their rates down in this high rate environment. You have to be going into it expecting to pay 2, 3, 4% in concessions to the buyer to help them buy their rate down. Now, where it can be a win-win is have that higher price or don't negotiate as much on price, because really coming off 10, 15, 20,000 off the list price does not make a huge difference on that buyer's monthly payment. But giving them 10, 15, 20,000 to buy their rate down makes a huge impact on their monthly payment. And buyers are mostly concerned with their monthly payment. So go in it with the expectations that this is my list price and I'm going to have to pay concessions in order to get this deal done. And you may also have to help a buyer in terms of overall repairs as well. It's just the nature of the market that we're in right now. So as we get into the fourth quarter, what we're going to be looking at is this is the second best time of year to be a seller, really kind of that mid-August, September, October timeframe. That's when kids are back in school. We finally start to see the weather in Phoenix cool off, so we do see a little bit more buyer activity, people wanting to get into homes before the holidays. For buyers, the best time to be a buyer is during the holidays. There's less options and less choices, but a lot of those people who are listed for sale are either in a situation where they have to sell, which is why they're listed during the holidays, or they didn't sell during the summer or fall season. Therefore, they may be more open to negotiations. So as a buyer, you may have less choices than you normally would, but you can really get some good deals during that holiday season. So sellers are good right now while we're in the early fall. Buyers are going to be really strong to make purchases during that holiday season. If you have any questions about the market, definitely leave them in the comments. Don't forget to give a like and subscribe, and we will see you next time.